Good morning. Welcome to Grab the Horns. This morning, one of the stocks that we're going to be looking at is Bank of America. Ticker symbol is BAC, and we're going to go ahead and hop right into this. As we know, with Bank of America in 2008, when we went through the financial crisis that we did, Bank of America was one of those leading stocks that really started to drag us down, along with a lot of other banks and financial institutions. And Bank of America is still very, very hurt right now. As we look at their stock price, when we pull up the chart and just kind of look at some of the indicators on that chart itself, we'll be able to see that Bank of America is still struggling right now. So what we're going to do is let's go ahead and pull up a chart on Bank of America, and we'll start to take a look at some of the things that we've noticed and that we want to bring to your attention in this trading day. So as we pull up a chart here on Bank of America, a couple of things that we want to keep in mind is, Bank of America at its high for the last year was back in June of 2010, and since then, it had some volatility, it had some ups and downs, came back up, tried to rally back here around $15 a share back in the beginning of 2011. Looking at around January, and then since January, with a lot of other banks and financial institutions, what we've seen is we've just seen a very big trend downwards. So as we see, Bank of America is making lower lows, continually going down, and now it's settling around $11 a share as of last Friday. So what we want to look at with this, one of the main things that we see, not only with Bank of America, but with a lot of other banks, and we'll take a look just as comparisons, is that as it's starting to go down, that's happening, and the momentum is also going down. So the momentum has consistently gone lower, 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 and as well as the price of Bank of America itself has gone lower, lower, and made those lower lows. So this is a bit concerning if you are long Bank of America, and it's also something that you certainly want to keep in mind before you go ahead and invest in Bank of America. The thing that we want to look at, though, with Bank of America is, it's not just Bank of America that's having troubles right now. There's a lot of other banks out there that are experiencing similar trends in their stock price when we look at their charts. So let's go ahead and pull up a few others here. What I'm going to do is I'm going to type in here and look at one of the big banks as well that has, that has had a lot of talk about it, especially in the last few months with their oil predictions and whatnot. Goldman Sachs. So as we look at Goldman Sachs, you'll see a very similar trend here. So this is the year 2011 starts, January 2011. As you can see here, it hit its high, $175 a share, and since then it has done basically the same thing as Bank of America. You see the simple moving average here. This blue line has just constantly gone down. These are two Bollinger Bands, two standard deviations above and below the simple moving average. As you can see, for quite some time here, Goldman Sachs has just been hugging that bottom Bollinger Band and just going down, down, down. And it settled on Friday at around $130, $133 a share. Same thing with Goldman Sachs as we saw with Bank of America is right here. As we look at the relative momentum play, this also has, the momentum has really gone down, so that's just another characteristic of these banks to keep in mind. So another one we'll pop in here, another very big bank is JP Morgan. Let's go ahead and pull up a chart on JP Morgan, and we'll look at what this has been trending. So very similar type of a pattern here. This is the beginning of 2011. As we see, it hit its high. This one hit its high a little bit later in February of $48. And since then, it's been a little bit more stable, but you can really see here in the last month, month and a half, it's really started to come down as well, again, hitting some more lower lows. And just like we saw with Goldman Sachs and with BAC, it's really hugging to that bottom line of the Bollinger Band here, and also the momentum on this is low. And just to give you one more example here, what we're going to do is we'll go ahead and pull up a chart of Wells Fargo and take a look at what Wells Fargo has done, which we'll see a very similar pattern here. So as we look, again, 2011 starts here. We're into February with this one as well. Hit its high back in February at $34 a share, and since then, very similar pattern to the other three banks. You see here, its simple moving average has trended down, lower lows here, and we're also seeing it hugging onto that bottom level of the Bollinger Band, and also the momentum play on this is very low again. So what we're seeing on all four of those banks that we looked at is just simply, their momentum is down and they have been trending downwards and really making those lower lows. So if you're thinking of investing in, or you are long these positions, what you really want to consider is this trend here, and you know the old saying, never buck the trend, so just keep that in mind. One thing with Bank of America, as we go back to a Bank of America chart here, that is somewhat interesting is as we look at Bank of America, the stock itself is obviously trending down, but there may still be some opportunity in Bank of America, not necessarily with the stock itself, but as we pull this up, I'm going to actually pull up some options chains here. And what we can see on the options chains with Bank of America that makes this possibly good for trading is you can see here that there's a lot of volume that's going on, and there's a low bid-ask spread, which basically means that as we look between the bid and ask here, there's not a wide margin between the bid and ask, and these are obviously the calls and the puts here. And the volume has been very good on the Bank of America options as well. So whenever you have high volume and a very slim price in between the bid and the ask price, that's always helpful. So that may be where there is some opportunity on the technical side of Bank of America. Besides that, as far as the stock itself, there's still quite a lot of problems with Bank of America, and that's just the technical side. So what we're going to look at now is, getting back into the fundamentals of Bank of America. So as we look at the fundamentals of Bank of America, one thing that we really want to keep in mind, besides obviously what's been going on with all the banks in general that we just took a look at on the charts, is we're still in a really bad mortgage crisis right now. As we look at any newspaper, any online source, wherever you get your news from, and you'll be able to see that the foreclosure rate has actually gone up. That is a very, very bad sign for banks. Banks are obviously in the business of lending money and collecting interest. They are not in the business of owning real estate. With foreclosure numbers going up, more and more people getting foreclosed on, this shows a bad sign for banks in general. So as we can see, bank prices have gone down quite significantly because of that. Another thing to keep in mind with Bank of America is in business with a company called Lender Processing Services. Now, Lender Processing Services, why Bank of America is associated with them is they actually use Lender Processing Services as one of their basically their processors for their banking their banking side of the business. Now, with Lender Processing Services, which this is a stock that we'll also cover a little bit more this morning, is they are actually being probed right now by the U.S. Attorney General the Attorney General of several states, as well as quite a number of congressmen for fraudulently creating foreclosure documents or fraudulently messing with the foreclosure documents. Now, because of Bank of America's association with this company, Bank of America is also a target of the fraudulent foreclosure docs, which could cause a very big problem for Bank of America stock. So taking that into consideration with the actual charts that we looked at, Bank of America right now is in a position where if you're long it, you want to consider that position, maybe put some stops underneath your position to lock in some gains if you have any, which you probably do not, or just save yourself from the downside risk if Bank of America starts to take a slide. And if you're considering investing in Bank of America, that may be something that you want to reconsider, especially with this recent news with LPS, as well as the foreclosure rate going up, and obviously the technical signs of Bank of America trending and continuing to trend downwards. So what we want to do is we hope that this is informative for you, and this can help you make some good trading decisions. And like we always say, get out there, grab the horns.